Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. Markets are dealing with rising risk of a military confrontation between the U.S. and Iran. Earlier, President Trump said the next 10 days will tell whether there will be an accord covering Iran's nuclear ambitions. In the meantime, the American military is stationing a vast array of forces in the Middle East. And the Wall Street Journal reported the president is weighing an initial limited military strike to force Iran to meet Trump's demands for a nuclear deal. Needless to say, a potential war would put the flow of crude oil very much at risk. The Mideast pumps about a third of the world's crude oil supply. In New York, trading WTI was up 1.9% to 66.43. For a closer look, I'm joined by Bloomberg's Paul Dobson. He is executive editor for Asia Markets. Paul joins from our studios in Singapore. Thank you for being here. It doesn't seem as though markets are terribly stressed about this situation. Oil higher, yeah. Maybe concerns are a little contained. How would you evaluate this situation?
I think that it's reasonable to say that based on the broad macro picture right now, Doug. If you look at Brent crude oil, it did close at the highest level since last summer in trading yesterday. So there is some risk starting to get priced into the energy markets, at least. But I think for broader macro, it's hard to discern or unpick the concerns over an Iran conflict from the broader themes that are out there. What I will say, though, is that, just a little bit kind of in the background there, we've had dollar strength this week, which we haven't seen for a while. It's its best week in 3 months. And that talks, yes, to the idea that the Fed sounded much more hawkish in the minutes than people had expected, but also to this idea that, maybe the dollar fares a little bit better when there's a little bit of risk and stress out there in global markets.
So China remains on holiday today for Lunar New Year. Other jurisdictions are back online. Are you seeing any high-frequency data on levels of consumer spending, whether we're talking about travel, restaurants, or merchandise? Anything that would kind of give us some insight into the level of consumer engagement during the holiday?
That is definitely the thing to watch. I haven't seen any of the data passing through as yet. And the concern, of course, is that China is still stuck in this kind of rut when it comes to consumer activity, and not just in terms of consumer spending and enthusiasm, but also the investment climate. So those are the two things that are really kind of under that great amount of pressure at the moment. People are paying down debt rather than putting money into productive uses, or indeed being willing to spend it on new products. And while there were little glimmers, I think, in the first couple of months of the year, some good numbers from Apple in terms of iPhone sales, some good numbers from Maotai in terms of Baijiu sales as well. So some alcoholic drink enthusiasm, at least. It does still feel like the economy is waiting for that spark to ignite more spending. And while the authorities have promised us that that's what they're working on, everything that we've seen so far has, I wouldn't say failed, but has only had a limited amount of enthusiasm behind it and hasn't really sparked a kind of self-fulfilling kind of build there.
I was reading that some of the big tech giants in China, names like Alibaba, ByteDance, Tencent, reported huge gains during the holiday from their new AI offerings. What do we know about what these companies are up to regarding AI?
Yeah, I think that it's becoming an increasingly competitive space in China, with a bunch of new models getting launched. We also had Zhipu, a newer company which has been on a real tear as its model gains traction. And, I kind of feel China's a little bit in some ways where the US was maybe a year, 18 months ago, not in terms of what the technology is doing, but in terms of what the market is pricing for the technology. And therefore, people are seeing in the investment side of things opportunities in the China tech companies that are already fully priced in US markets. And so that, makes China's stocks kind of interesting, and particularly if they're getting an upswing in usage. The The downside is that, as I said, it's highly competitive. And so all of those companies have limited pricing power because they're all competing against each other for the same type of customer and the same amount of money or share of the pie. So much as we've seen with electric vehicles, for example, and particularly with online retail, you have that very fierce competition, which erodes profitability.
Maybe we can talk about the trade picture next, because in the U.S., the government reported that the trade deficit widened last year. This is the annual figure, to more than $900 billion. Obviously, the tariffs are a major factor here, and I'm imagining they created a lot of volatility when you look at the entire 12-month period, because month to month, the narrative seemed to shift slightly. It was interesting that the deficit with China shrank last year to the smallest in more than 2 decades. But when you look at trade deficits with countries like Mexico and Vietnam, they widened to record levels. So there seems to be a real reorganization of global trade flows as a result of these tariffs.
Yeah, that's absolutely been true. And obviously some of it has been diversion, so using transit countries in terms of the exports to the US from China. But some of it has been, a bit of a shake-up in the way that people are doing business and the way that money and goods are flowing around the world. One thing that I thought was interesting as well is that Taiwan actually overtook China in terms of dollars of exports to the US last year based on those data. So that tells you, one, the humongous demand for the technology that's coming out of Taiwan, particularly the chips, but also the fact that China is looking to other markets. And I think that, that's been a very clear secondary trend, the idea that China is still, retaining a massive trade surplus, but it's not all going to the US anymore. A lot more of it is going into Europe and newer markets as well. So just as you said, the tariffs have changed the flows of goods, but they haven't changed that overall picture of China as a very big exporter and the US as a very big importer.
Maybe we can talk a little bit about inflation in Japan, because we had the CPI number this morning. Consumer prices, excluding fresh food, up 2% from last January. That's the smallest gain since January 2024. If you strip out energy, we saw a gain of 2.6 on an annual rate. And you and I both know that that's still above the BOJ's target. What is the path forward here for Japan? Prime Minister Takaichi trying to stimulate the economy, but it's clear that inflation is still a major issue.
Yeah, it is a major issue. And so Takaichi's plan is partly to help the economy deal with the inflation by reducing taxes. That's the main goal, cutting VAT, which is massively unpopular in Japan, and providing subsidies as well to help people around it so the inflation can stay and wind its own way through the system, but people will be able to manage it or deal with it. The bigger question is, part of that stimulus plan, how much does Takaichi lean on the BOJ to try to get them to be slow at raising interest rates? The BOJ has signaled that its intention is to carry on hiking at a regular and pretty slow cadence, but what it would really like to do is to have interest rates firmly away from that floor that they were stuck on for so very long. And also, it quite wants there to be some inflation in the economy, so it doesn't want to snuff it out altogether, having spent decades of disinflation and deflation along the way. So it's that delicate balancing act. The market is still expecting that the BOJ will continue to raise interest rates over time. And, that has pushed up yields to a certain extent. But the market has also been wary of inflation, and that's been a major cause of volatility at the back end of the yield curve. Right now, we've had a pretty good rally in longer-term Japanese government bonds, I think partly on the idea that inflation can be under control and partly on the idea that Takaichi will, with such a firm mandate, be able to act with more authority, more decisively, and more focus in terms of the cash giveaways that she's doing and the way that she funds them. So
as you and I are speaking, I'm seeing weakness in the Japanese equity market. Do you have a sense of what accounts for the weakness today if you look at the internals?
I think that they've been having a pretty decent time of it of late. I think that going into the weekend with this Iran risk that we were talking about, there is maybe a little bit more caution more generally out there right now. But I don't think that, that changes the slightly longer term picture, which is that although they sort of lost a little bit of momentum, there's a lot of global interest still in Japanese equities and still quite a lot of money flowing in, which ought to be relatively supportive.
Is there anything else that you're looking at today as we wrap up the trading week in Asia that has the ability to impact markets in a significant way?
I think, it's not a big impact for Asian markets, but I do note the amount of interest that there was in Blue Owl and its private credit lending over the last 24 hours. What it did is sort of change the way that it's allowing redemptions for some retail investment products, and that has rattled people quite a lot because they're thinking, is this another sign that private credit isn't functioning the way that we would like it to, that there's more risks in that market space than the people are letting on, essentially? Is there something going on here that we need to be worried about? And the market's already been bit nervous about private credit more generally because of the amount of lending that there has been into the sectors that have been damaged recently by the AI capabilities. So thinking about financial services, thinking about insurance companies and those kinds of things.
Software too, right? Yeah.
And software's a big one. That's right. And so the amount of private lending that's been pushed in that direction, and whether those loans are still good. Essentially. Now, the private credit companies will all say, don't worry, they have very low default records. They manage the finances very carefully. But, because it's so opaque, partly, the market is suspicious and nervous about this. And so I think that's why the stock performance of those asset management companies, including Blue Owl, which fell, I think, as much as 10% before recovering a little bit of the losses in trading in the US yesterday, is another thing that is worrying people, partly because of the paucity of information there.
Yeah, it's a $1.8 trillion market, so there may be a little bit of systemic risk, too, if there in the future becomes greater difficulty. But there's got to be a lot of concern if you're an investor. Anytime you hear of a company restricting withdrawals from a certain fund, and to your point, I think that's what rattled the market today in regards to Blue Owl Capital. Paul, thank you so much. Enjoy the weekend. Paul Dobson is executive editor for Asia Markets, joining from Singapore today here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. And as I mentioned earlier, markets are very anxious over President Trump's next move on Iran. The risk of a military confrontation is high. There is already a vast array of American forces stationed in the Middle East. This would include 2 aircraft carriers, jet fighters, and refueling tankers. And needless to say, a potential conflict would put flows of Mideast oil at risk. And that's where we begin our conversation with Barbara Slavin. She is a distinguished fellow at the Stimson Center. Barbara spoke with Bloomberg TV host Shery and Avril Hong.
Give us a little bit of perspective of how significant these moves are by the United States to send forces around Iran. We're hearing is the first time that we have such a massive force since the Iraq War.
Yeah, it's frankly very worrisome. I don't understand what the emergency is that requires the United States to contemplate military action against Iran. The country is at its weakest in many ways. Its nuclear and other facilities were hit last June, as you know, by Israel and the United States. Its currency is extremely weak. It's just coming off very significant protests, which were repressed brutally. It does seem as though this is some sort of play to try to overthrow the regime, which President Trump has mentioned as one of his goals. But you cannot conduct regime change with airstrikes. If there is something more to this plan, I'm certainly not aware of it. It's causing a lot of consternation in the United States, frankly. A lot of political opposition, certainly among Democrats and also among Republicans to some extent. Trump has not asked for any congressional authorization. He's given no explanation for why Iran is suddenly such a threat to U.S. interests.
Barbara, you mentioned the targeted attacks on Iran back in June, but of course we've also had the drug trafficking boats also being attacked, not to mention, of course, the extraction of Nicolas Maduro in Venezuela. How much bolder is the U.S. foreign policy towards these regimes getting recently, and what are the risks of this new approach?
Yeah, this is not what President Trump campaigned on. He didn't campaign on foreign adventures and regime change. It's really strange. It's as though he's channeled George W. Bush in some way. Again, I'm not privy to his personal thinking. He obviously believes that this is a strategy that can bring results. But we just had a very perfunctory session of talks in Geneva between President Trump's envoys and the Iranians. There was some talk about future negotiations and the Iranians promising to come forward with some concrete proposals. But the positions of the two sides seems very far apart. In the past, of course, we've had U.S. strikes while negotiations were supposedly still ongoing. So there's a lot of nervousness, frankly, that we might see strikes as soon as this weekend when all of these forces will be in place. The other factor, of course, is the Israeli factor. What are they hoping to get from this? Will they join in? Do they want to hit Iranian missile positions, perhaps, which is a key concern for them? Again, very, very little explanation, very little daylight, and this is really infuriating to people who thought President Trump would concentrate on domestic issues, and particularly the U.S. economy.
To your point earlier about not having congressional approval, of course, this was also the case with Venezuela. But I wonder, given this backdrop, what is your sense of the extent in which there could still be a sort of deal on the nuclear program between the U.S. and Iran?
Well, that means that President Trump will have to accept something less than what he has suggested. The Iranians are perfectly willing to postpone, to stave off, suspend uranium enrichment for a number of years. They're willing to send out or dilute highly enriched uranium stockpiles, which they still possess. But they are not willing to say that they will never enrich uranium on Iranian soil. They believe this is their right. They also have ruled out any talks on their missiles or on their relationship with regional partners, which have also been mentioned as demands on the part of President Trump. He's also talked about regime change in a very cavalier fashion and suggested that would be a wonderful outcome. But again, I fail to see how attacking Iran now will bring about that regime change. It could bring about more chaos. It could bring about some civil strife, maybe more protests. But the Iranian government has been preparing for a long time now and expecting, frankly, new Israeli and American strikes. And I'm sure they have plans for pretty much whatever Trump is contemplating.
Barbara, on those issues on regional forces, can you also talk to us about how things have changed between Iran and some of its proxies in the past year? How much has its influence shifted?
Iran is certainly much weaker than it was a couple of years ago, primarily because of the blows struck against Hezbollah in Lebanon and also the fall of the Assad regime in Syria a couple of years ago. But Iran still has relationships with the Houthis in Yemen, which can disrupt shipping in the Red Sea. It has relationships with militias in Iraq, which may be called upon to attack U.S. bases, U.S. personnel still in Iraq. It is not without resources. And I think this is an extremely dangerous situation where, escalation can certainly happen rather suddenly. The U.S. has 30 to 40,000 personnel stationed at bases in some 8 countries in the region. Many of them can be reached by Iranian missiles and rockets. The U.S. has, of course, means of defending these places, but I think what we've seen in the past is that Iranian retaliation has been telegraphed and pro forma. No Americans have been killed, and I don't feel as confident that can be the case this time. I think the Iranian regime may feel that its back is to the wall, and it may simply let fly with whatever it has. Trump has been lucky in these military adventures of his. He's not lost American lives. If that changes, that's really going to affect his status in the United States. We have midterm elections coming. I'm trying to imagine what he is thinking. Now, maybe there is some deal that still can be reached. Of course, he's perfectly capable of declaring victory, even if the deal is not much of an improvement on previous agreements with the Iranians. But if so, why all of this amassing of American military power? Why these threats? What's the strategy? What's the goal? We are frankly all rather confused here.
That was Barbara Slavin, Distinguished Fellow at the Stimson Center, speaking with Bloomberg TV host Shery and Avril Hong, bringing you their conversation here on the Daybreak Asia podcast. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.